There is a moment in history that no one sees coming, not because it is hidden, but because the human mind refuses to accept what it cannot imagine. In 1929, the stock market climbed for months while economists promised permanent prosperity. In 1989, Japanese real estate reached heights that everyone believed would last forever. In 2008, the banking system stood as a monument to stability and then collapsed in a single week. Every single time, the pattern was the same. The warnings were there. The data was clear. But the mind of the crowd simply could not process what was about to happen. And now, one of the most successful investors alive is standing in front of cameras, speaking about debt, about empire, about the fragility of everything we call normal. And most people are hearing him the same way they heard every warning before. They are hearing it as noise. They are hearing it as someone else's problem. They are hearing it as something that will not happen in their lifetime. That is exactly what every generation thought. That is exactly how every crisis arrived. Ray Dalio has spent 50 years building Bridgewater Associates into the largest hedge fund in history. He did not do that by following consensus. He did it by understanding that markets are not just numbers. They are the collective expression of human psychology, debt cycles, power structures, and historical patterns that repeat with terrifying regularity. Dalio has a framework. He studies empires. He studies the rise and fall of currencies. He studies the way debt compounds until it cannot be paid back, the way central banks print money until the money loses meaning, the way the middle class grows frustrated until the political system fractures under the weight of its own contradictions. This is not speculation. This is pattern recognition applied to the entire arc of economic history. And what Dalio sees right now in 2024 and beyond is a convergence of forces that has historically ended in only one way. Not in a slow correction, in a restructuring, in a reset, in a moment where the rules that governed the previous generation stop working. Let me tell you what that actually looks like. It starts with debt, not the kind that makes headlines, the kind that lives quietly in the background, growing every year, becoming a larger and larger share of everything the government does. The United States is running deficits that would have seemed impossible to previous generations. The interest payments on existing debt are climbing past the ability of tax revenue to cover them. There is no wall to hit. There is no moment where the math gets better. Every year, a larger portion of every dollar the government takes in goes to paying interest on money it already borrowed. This is not a political argument. This is arithmetic. And arithmetic does not care about which party is in power or what the news cycle looks like or how confident politicians sound when they promise that everything is under control. The numbers are the numbers, and the numbers are building towards something. Now here is what most people do not understand about debt at this scale. When a government can no longer service its debt through normal means, through tax revenue, through economic growth, through reasonable borrowing, there are only three paths. 1. Cut spending dramatically. 2. Raise taxes dramatically. 3. Print more money. Every government in history that has faced this moment has chosen the third path, not because it is wise, but because the other two options cause immediate political collapse. Printing money is the path of least resistance. It happens quietly. It does not require anyone to make the hard choice publicly. It spreads the pain across time and across everyone who holds the currency. It is, in the psychological sense, the perfect political solution. And that is exactly why it is so dangerous. Printing money does not solve the problem. It changes the problem. It transforms a debt crisis into an inflation crisis. It erodes the value of savings, of fixed incomes, of anyone who played by the rules and saved money for decades. The people who suffer most are not the wealthy. They own assets that rise with inflation. The people who suffer most are the middle class, the teachers, the nurses, the small business owners. The people who did everything right and still find that the foundation beneath them is quietly crumbling. This is not a theory. This is what happened in Weimar Germany. This is what happened in Argentina multiple times. This is what happened in Zimbabwe, where the government printed so much money that a loaf of bread cost $1 billion by the end. These are not fringe examples. These are the destinations this path has always led to every single time it has been taken. And this is where we need to talk about what Dalio calls the long-term debt cycle. It is a pattern that has repeated across every major economy for hundreds of years. There is a phase of growth, where debt finances expansion, where asset prices rise, where everyone feels wealthier. Then there is a phase of saturation, where debt is so large that growth cannot service it, where the system becomes dependent on continued borrowing just to maintain itself. Then there is a phase of reversal, where the currency weakens, where inflation rises, where the middle class feels the squeeze, where political populism surges from both directions, where the existing power structure begins to fracture. This is not a single event. It is a decade-long process, and most people only recognize it when they are already deep inside it, when the damage to their savings, their career, their sense of security has already been done. Here is the part that should make you uncomfortable. We are not at the beginning anymore. We are not in 2005 when the warning signs were visible but no one was paying attention. We are further along. The debt is larger. The political system is more fractured. The geopolitical tensions are higher. The inflation has already arrived. The Fed has already printed more money than any point in history except one, and that was during a global war. The system has already been stressed. It has already been tested. And the question now is not whether the pressure will continue, but how the system will respond when the next major shock arrives. Because there will be a next shock. There is always a next shock, and the systems that look strong right now are the ones that will look most fragile in the moment. Dalio has been explicit about this. He has said that we are entering a period that resembles the late 1930s, not because he wants to scare people, but because the structural conditions are similar. Wealth inequality has reached levels that create political pressure. The middle class is frustrated. The political center is weakening. The two extremes are gaining power. Geopolitical competition between major powers is intensifying. The financial system is carrying more debt than it can sustainably manage. And the global reserve currency, the dollar, is facing its first serious challenge in decades. These are not predictions. These are observations about the structural position we are in. They describe the terrain. What happens next depends on how the terrain interacts with the events that arrive. Now let me explain something that most financial media never talks about. The dollar is not just a currency. It is the foundation of the entire global financial system. Most international trade is priced in dollars. Most central bank reserves are held in dollars. The dollar is the safe haven that investors around the world run to when fear rises. This is called the reserve currency status, and it is one of the most powerful structural advantages any nation has ever had. But reserve currency status is not permanent. It has been held by many empires over the centuries, the Dutch, the British, and now the Americans. And every single time, there comes a moment where the cost of maintaining the empire exceeds the benefit of the reserve status, where the printing of currency to support domestic obligations begins to erode the confidence that the world has in that currency. And when that confidence breaks, not all at once, but in a slow, grinding erosion, the consequences are not just economic. They are geopolitical. They reshape the entire global order. This is what Dalio calls the internal order cycle. As wealth inequality grows, as the middle class feels left behind, as the political system becomes more gridlocked, there is increasing pressure for restructuring. This restructuring can happen through reform, through changes to the tax system, to the regulatory system, to the power structure itself. Or it can happen through crisis, through a breaking point where the existing system cannot hold and something collapses before it can be reformed. History shows that most systems do not reform in time. Most systems wait until the crisis arrives, and then the crisis itself becomes the agent of restructuring. The question is never whether the restructuring will happen. The question is whether it will happen with order or without it. Let me be specific about what this means for you, for your savings, for your career, for your family. The danger is not a single crash. The danger is a slow erosion combined with sudden shocks. The danger is that the things you have been told are safe, cash, bonds, the stability of the dollar, the permanence of the existing financial institutions, are the things that lose value slowly and then all at once. The danger is that inflation is not a temporary problem that will be solved by higher interest rates. It is a structural consequence of a system that has accumulated more debt than it can service without printing money. The danger is that the next 10 years do not look like the last 10 years. That the environment changes in ways that make the old playbook ob. Solely, that the people who succeed are not the ones who followed the crowd, but the ones who understood the terrain and positioned themselves differently before the shift happened. And this is the thing that Dalio has been trying to communicate in his books, in his interviews, in his principles for navigating big debt crises. He is not saying sell everything. He is not saying the end is tomorrow. He is saying that the environment is shifting, that the old rules are changing, that the structures we have built our lives around are entering a period of stress they have not faced before, and that the only protection is understanding, diversification, and the psychological strength to act differently than the crowd when the crowd is still comfortable. What does that actually mean in practice? It means owning real assets, things that hold value when paper currency loses purchasing power. It means thinking in terms of diversification across currencies, across asset classes, across geographies. It means understanding that cash is not neutral. It is a claim on future goods, and when currency is printed at high rates, that claim loses value over time. It means building resilience in your personal finances so that a major shock, a job loss, a market correction, a period of high inflation, does not destroy the foundation you have spent decades building. It means thinking carefully about debt, because debt is a claim on future income, and when the currency weakens, the real burden of that debt grows even if the nominal amount stays the same. But beyond the financial mechanics, it means something deeper. It means developing the psychological capacity to recognize when the crowd is wrong, because the crowd is wrong right now. The crowd believes that the system will continue as it has. The crowd believes that the institutions will hold. The crowd believes that the next decade will resemble the last decade. The crowd is always most confident at the top of a cycle and most frightened at the bottom. And the people who build lasting wealth are not the ones who follow the crowd into the top of a cycle. They are the ones who see the cycle for what it is, position themselves quietly before the shift, and then have the patience to hold through the noise and the chaos and the fear that arrives when the old certainties dissolve. This is not about being pessimistic. This is about being accurate. History is not a story of linear progress. It is a story of cycles within cycles. Empires rise and fall. Currencies strengthen and weaken. Systems form and break. The current global financial order has been in place for 80 years, since the Bretton Woods Agreement established the dollar as the reserve currency at the end of World War II. That is a long time, longer than most historical cycles. And the structural pressures building beneath it are not small. They are the natural consequence of decades of accumulated debt, of wealth inequality, of geopolitical shifts that have been happening slowly and are now accelerating. What happens next? That depends on decisions that have not been made yet, on policy choices, on technological developments, on whether the political system finds a way to reform itself before the pressure becomes a crisis, on whether the major powers find a way to manage their tensions without escalating into conflict. These are not predetermined, but the structural conditions are clear, and understanding them is not pessimism. It is the only rational response to the data. The investors who survive the next decade will not be the ones who were most confident. They will be the ones who were most prepared, who saw the terrain clearly, who built resilience before it was needed, who understood that the greatest risk is not volatility. It is the assumption that the future will resemble the past when the structural conditions have fundamentally changed. Most people will not change until they have to. Most people will wait until the crisis arrives and then react. That is the nature of the crowd. But if you are watching this video, you have already done something different. You have already chosen to look at the terrain before the storm arrives. That choice, that willingness to see clearly rather than to comfort yourself with old narratives, is the beginning of everything. The system looks stable until it is not, and the ones who see it coming are the ones who position before the shift, not during it. That is how wealth is preserved. That is how families are protected. That is how the next generation is given a foundation that does not crumble when the ground shifts beneath it. Something massive is happening. Most people still do not see it. The question is not whether they will eventually see it. They will. The question is whether you will have prepared before they do.